Okay, so we're going to go through an 8 mark and a 12 mark question so you get an idea of what way to respond. We're using this paper from, I think, summer 2013, AS1. I don't really like, I didn't like this paper at the time, and I still don't really like it. It's a bit obscure. It's about the market in general as opposed to a specific business, which makes it a little bit vague, which again, for our purposes of digging deep into the context, makes life a little bit difficult. Now, what sort of things would I pick up from this? Let's just go through the script here. Let's just see what if anything, is interesting. Okay, so we're talking about the calendar industry. September marks the beginning of the calendar industry, so I'd say seasonal. So it's September through to obviously December and maybe the new year. Manufacturers launch their New Year editions ahead of the Christmas market. They make ideal gifts, are generally affordable, and cover a wide variety of themes. So I'm thinking mass market product. If he says they're affordable and there's a wide variety of them, etc., really thinking mass market, because you've got it with so little context to work with. You've really got to draw your own inference from that context and start to join up the dots yourself. The latest editions of last year's best-selling title in the UK, the official Sir Cliff Richard calendar, oh dear, we have suffered enough, has just been launched. It will have to compete against numerous others featuring pop stars, football teams and celebs, also popular calendars featuring dogs, cats, meerkats, steam railways and even goats and trees. Okay, bizarre, but anyway, what is that telling us? It's telling us that it's a competitive market. I'm going to abbreviate that to compv market. Not meerkat, but market. Little differentiation. There is differentiation, but there's not a massive amount. I'm just going to abbreviate that as well because of my ugly writing on this iPad. Right, what else? It seems amazing that such a low-tech product has survived when online calendars are available to all and smartphones now come equipped with personal diary planners. Wander through any shopping centre though and it quickly becomes apparent that traditional calendars remain popular. One retailer alone, Calendar Club, expects to sell 4 million calendars in the UK this coming year, so there is still a market for it. However, in the USA, technology has had an impact with sales down 28% between 05 and 09. Okay, so what do we draw from that? Low tech, and then we think about the stage of the product life cycle. This is at, it must be near the end, but there is still a market. Okay, there's still a large market. I'll just write that over here. Again, just abbreviate the market to MKT. Getting the price of calendars right is extremely important, as is taking advantage of unexpected opportunities which come along, such as a team's success. So there's still opportunities on an ad hoc basis depending on sort of events. I'm guessing things like, we've got the Euro, football finals at the minute, so stuff like that. Still sizable market for calendar, so not right at the end of the product life cycle. USA, sales down 28% in 4 years. So then we have to ask ourselves in things of in terms of the product life cycle. Boston Matrix, we're thinking our product portfolio. Is it a cash cow? Is it a dog? Is pricing is increasingly popular? They probably need market research to get the pricing right, to make predictions about that. So there are a lot of themes coming in here. It's seasonal, mass market, competitive market. There's little differentiation. There is, it's low tech, where is it on the life cycle, but there's still a sizable market, so it's not dead and buried yet. But there are a few different themes there related to marketing, pricing, differentiation, branding. There's a lot of marketing themes in here. So let's go on and look at the first question. Now we've got quite a bit of context here, and obviously you would do this a lot faster. This is a little bit unconventional because what we're essentially saying here is that instead of having 2 points, two sort of paragraphs, we have to draw a diagram as well, which is unusual. But let's just do our demand curve here, and we'll do, let's pick a different color. Let's go green. We'll put supply there, and then our equilibrium point is there. Alright, so that should be your starting point for your diagram. Okay, so what has happened? Essentially what they're saying is, they've said what's happening between December and, is it August? So they're hinting at, you know, the market is very seasonal. Well, you don't have to get overly complicated about this. They don't want to see multiple stages. They don't want to see, for example, this happens, then this, then another shift in the supply curve, then the demand curve shifts out again. You're just going to have spaghetti where you have lines, 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 and it doesn't make sense to anyone. It's very difficult to annotate that appropriately. So what you would do instead is you'd say, right, well, what's going to happen? Is supply going to change? Well, supply is going to be fairly fixed because they've made all the calendars and they're sitting on the shelves, okay? But what happens is the customers decide that after January, they're not getting as good value for money because their calendar is 12 months. And then they think, well, if I buy the calendar in the new year, I'll get in 12 months of value. If I buy it in March, I'm only getting 9 months of value, okay? So what essentially happens is as time goes on, then demand is going to shift leftwards. Okay, the price hasn't changed, but demand's going to shift leftwards. Okay, which means that the suppliers, the retailers, are going to have to cut the price. So the price will go from equilibrium price there and equilibrium quantity there to, let's say, Q1 and P1. So essentially what's happening is because of the shift in demand, it's pushed the price down. Okay, so let's have a look at Thomas Boyd's answer and see what he said about it. Next, the question we want to look at was use demand and supply curves to analyse how the market for 2012 calendars might have changed between 2011 and 2012. Well, this is a little bit... Okay, so here we have Thomas's answer. I'll just get my... Okay, in September 2011, demand for calendars will be high because they make ideal gifts. So there's a little bit. He said demand will be high. A1. They make ideal gifts and are generally affordable. So it's a kind of mass market thing I was talking about. This means that, look at his AO3, that's the phrase that pays. This means that since calendars are high in demand, the price for them will be relatively high so that supply can meet demand. Okay. Yeah, okay, fine. It's not that penetrating analysis, but it's kind of on the right path. Therefore, calendar company will have to use price determination, A. Do you mean price discrimination? To work an appropriate price so that they don't get excess demand or supply. This is kind of a weak bit here. Okay, he needs to say something a bit more meaningful. I don't know what he needs to say, but it's definitely not that. I think he maybe needs to get his diagram done first and then write around that. Okay, let's go to the next paragraph. In August 2012, the demand for the calendar will have dropped as many people wait on buying or put off buying a calendar halfway through, or sorry, won't buy a calendar halfway through a year. Okay, true. And technically that's kind of AO2 because he's bringing in the context from the question. This means that, there it is again, since the quantity demanded has dropped, the price will also need to drop, so the price is at equilibrium. Well, that's kind of what I said in the previous slide, so good, he's got that right. Okay, he's properly analysed the effects. This means that profits at this time of year is reduced, leading to a reduction in calendar made. I don't know if that's really penetrating analysis, to be honest. It's a bit basic, but he got this key point here, which is really what the examiner is looking for. Okay, how would I have addressed this? Let's go to the next slide and see. Okay, so back to this diagram. If we did the diagram first, we would say between December 11 and August 12th. Demand falls. And you can bring in that bit about September as the high point or whatever in the calendar production schedule. Don't want to say production calendar. Demand is going to fall significantly, as we can see from here. Now you're using that essentially as your a little bit of context and a little bit of analysis as well. So demand's going to fall substantially during that time, or quite steadily over that time. Okay, what does that mean? Sales down, demand down, excess supply, this leads to lower prices, to shift stock. If you wanted to take that on a little bit further, because actually that's quite, I mean, they'd be pretty pleased with that analysis that you've simply got the idea right. Okay, so they'll be pretty generous in terms of how many marks out of 8 they're going to give you. If you wanted to take that on and get a little bit more penetrating analysis in context, you could say something like, invest in machinery is an issue, or they're considering investing in machinery. Should they invest if sales and prices are so seasonal? Something like that, you could bring that in. But really, that's an extra. I would say if you're really just elaborating on those bare bones there, that's really the scaffold you need for it. Okay, so if you're bringing in those 2 points with this diagram, the diagram is going to give you about half the marks for that sort of question. Okay, I don't think this question is going to come up again anytime soon because it gets a bad response, but it's just remember to just think in terms of one stage. Don't think about multiple different stages and lots of different lines here. Just get at one stage. What happens first? Well, obviously with the onset of time, the value for money from the calendar is falling. It's diminished, so demand for calendars is going to drop as well. Okay, so we'll maybe get our teeth a little bit better in this more conventional 12-mark question. Discuss the arguments for and against the calendar manufacturer investing in new printing machinery. Well, with 3 points and 3 pros and 3 cons, rather, to give us our sort of 3 balanced paragraphs. So our AO1 is essentially on this side, and our AO4 or however points are on this side. First point I would make, and you can use different points, but these are just 3 that I thought were maybe the most some of the most obvious, I guess. The fact that it would increase efficiency, then you could bring in aspects like it's a competitive market, or it reduce their costs, more likely to invest in maybe better images to include in the calendars. Anything which is going to make it possibly more profitable and certainly protect their margins. Possibly they are going to boost profitability, or they're going to reduce costs, or somewhere in between the two. The downside, of course, could be that it is a declining market. There's your context being brought in as well. Is it a cash cow? Is it a dog? It depends. We're not sure about that, but certainly we know it's a mature market and just how much longer they can continue for. And then you have to consider, is that a good investment to invest in new printing machinery in a declining market? Would they be better to invest in product development, bringing in other products to try and replace this product which is in a market which is clearly in decline, or at least in the more mature stages of the product life cycle? The next point is competitive advantage. The machinery gives you a competitive advantage in terms of quality, which would give you a differentiation advantage. Remember to be specific. It's either a cost advantage that it's given you, or a differentiation advantage in terms of strong branding or a unique selling point. Your differentiation could be simply that it's higher quality because you're using more up-to-date machinery. The downside could be then it's a competitive market. The cost of the investment may have an impact then on price, as you may have to recover the cost of the new machinery by raising prices of calendars. Is that going to exclude the opportunity for finding new customers? The final point might be something like it's a declining market, but there is still scope to invest. You could bring in, as your context for this, you could bring in the Calendar Club, which is quoted as selling 4 million calendars in the previous year. So there's still potential to make substantial sales and profitability, or sales and profits, while you develop new products. Maybe that money could be used. I mean, essentially that's like a cash cow, and you're siphoning off the profits from sales of those calendars to bring in new products, possibly even in a new market or a new, completely new product area. The downside of buying new machinery is, of course, you have to spend money on training. It's a little bit like if, you know, somebody gets new technology, if they get a new phone, if they get a new computer, if they get an iPad or whatever, then they need to know how to use it properly. If they don't know how to use it, then it's of limited effectiveness. Okay, so you'd have to also invest the money in training, which may be disruptive in the short term, or staff may not want to be involved, and so on and so forth. So there's 3 points balanced, and really if you just come up with a conclusion at the end based on the kind of gist of your arguments, or the momentum created by your arguments, then you should be looking at something like 8 or 9 at least out of 12. And hopefully if you've added a bit of context and a bit of detail, you should be pushing into that 10, 11 or 12 out of 12 bracket, which is where we all want to be.